Untitled. So moving on to a sector that maybe has not been as negatively affected, as a matter of fact, positively affected, well, convenience store and food shopping. I'm turning to Devon, and maybe before I go into introduce into asking you a question, Devon, let me quickly introduce yourself. I mean, you're the CEO or founder of a company, a mobile app company, if I want to call it this way. I'm sure you will correct me. A platform company called Buymie, and you will explain exactly what Buymie does. But we know that you don't have any store, and you don't have any van, and you don't have any sales. Well, infrastructure per such. So you're a little bit like the Deliveroo of the Uber of that world, would become like a major player in an industry, and yet it seems to have very little asset. But you will explain to us how it works. I'd like to ask you really to, you know a lot about platforms, and you've been the director of Sharing Economy Ireland, and so I'd like to ask you about your opinion about like the role that digital platform might play. But before that, maybe you can tell us a little bit about what Buymie is about, and how the food industry and your particular company have been impacted by this crisis as a way of example. So Devon, I'm going to let you take over.
Thanks so much, Laurent, and I really appreciate you guys having me on today. So yeah, so I this is such an interesting period, and there's such a unique mix of impacts, I think, that we're seeing off the back of COVID. And I think, grocery and food retail is in such a unique position. And what I wanted, I suppose, to do today is to really take an opportunity to share a slightly more macro view of what's happening within grocery, within FMCG, because, although all of a sudden it's a very hot topic now, particularly over the last 3 months, grocery retail has been going through a significant period of flux for the past 4 or 5 years. I'll give it a little bit of background on myself. I'm here with some very esteemed individuals, so I might give a little bit of background on my own experience. My background is not primarily technology or even grocery. I spent the vast majority of my career working in the energy markets, which was working with large, pharmaceutical manufacturers, retailers, to understand, analyze macro market movements, and develop hedging strategies and trading strategies that would help them avoid the impact of geopolitical movements that would impact the cost of energy. And in 2014, I was getting the itch to start another business. Buymie is my 5th business, so I've had 4 spectacular failures that have got me into this mess. And I stumbled upon a commodity market I'd never really seen before, or at least never really appreciated, I suppose. And that was the grocery e-commerce market. So to give it a little bit of framing, grocery e-commerce in 2014, when I first started looking at this space, was worth £9 billion just in Ireland and the UK alone. I mean, there are not many markets of that size. The residential electricity market, for example, is 13 billion. But what I understood immediately, and maybe to give a little bit of context as to what's happening in this space, because obviously online within grocery is becoming a massive channel, and it's been greatly accelerated in the past 3 months. But one of the key things that not many people understand is that grocery online is deeply unprofitable. And it has been burning cash for the best part of 20 years. And so in 2014, when I came across this market, I recognized that there was a massive hole that really was being heavily subsidized by the retail market. And so, out of a £9 billion market, you were losing £300 million a year as an aggregate. You're ultimately looking at a dysfunctional market. But at that time, it was a very small portion, and subsidization is very common in markets. Gas, for example, is a subsidized market. But when I looked at the long-term demand curve for online grocery, without COVID, it was already set to double to £22 billion within just 10 years. The fact that it was already heavily loss-making, gave me I suppose I put my free market economist hat on and thought, well, if you have a rapidly expanding market and heavily compounding losses and a very short window of time, it's very likely that this market is going to experience a significant correction, a disruption of some sort, and that will be driven by the market, because the market just will not tolerate these levels of inefficiencies. So I really got quite excited about this and thought that this might be a very cool place to be for the next decade or two of my career. And that year I left the energy markets and I decided to kind of embark on this journey. So I'll give it a little bit of context on what Buymie is in the context of the service and the business that we are. Ultimately, Buymie is a free to download app across iOS and Android, and we allow users to order grocery and household items from large retail partners like Lidl and Tesco today, and have their items delivered store to door in as little as an hour by their very own personal shopper. We charge a commission, we charge a delivery fee. We're about 20 to 30% cheaper than visiting a traditional convenience store. And we're 12 hours faster than your next day traditional delivery services that have been around for the best part of 20 years. The way in which we work is quite unique because as Laurent indicated, we don't own any vans, we don't hold any stock, we've no warehouses. A lot of people think of us as a delivery company, but in fact, we're actually a data science company, and we are a platform, pure and simple. And what that means is that when a customer downloads the app, we provide the infrastructure to collect the data of their order. And they choose a store that they want to shop in, they fill the basket with the items that they want, and then they place the order into the platform. At that point, that order is fed into Jarvis. For anyone who's a Marvel nerd like we are, Jarvis is essentially our core IP. It's a high frequency optimization algorithm that essentially monitors all the real-time variables of the grocery retail market at any given time. And when I say variables, what I mean is, how many items are in a customer's order? Where is that customer located? What are the stores within that region? What's on-shelf availability like? Traffic conditions, weather conditions. How many shoppers are available on the network, and where are they predicted to be at any given time throughout the day? And so when the order comes in, Jarvis will analyze the order, bundle it with orders of a similar characteristics, and then send that to an independent personal shopper. So this is Marta. Marta is available. She's told Jarvis a week in advance. She's booked a session on the platform, so Jarvis knows where and when she's going to be available. She receives the bundle, accepts it, and then is routed to the very best retail location to fill that order from. So the customer doesn't choose the retail location. Jarvis will actually choose the location based on things like chill chain and logistical proximity. So Marta arrives in store. She will use a shopper app, which is a complementary interface and that allows her to view the data that the customer has compiled in their order. She'll pick, pack, and prepare the items on behalf of the customer. If there's anything out of stock and they don't have any fillet steak, she'll ring the customer to say that they don't have it and manage those expectations and also find the very best substitution for the shopper, for the customer at that time. She'll then pay for the items like a normal customer would at checkout using a prepaid card, which Jarvis has preloaded with capital, or cash rather, to be able to purchase that order on behalf of the customer. So it's a completely cashless system. We facilitate the transfer of two things, data flow and cash flow, between two stakeholders in the market, personal shopper and customer. At that point, she leaves the store and Jarvis will route her again via the most optimized logistics route to deliver those orders on behalf of those customers. And so that gives you a little bit of a flavor of what we are as a business. We're a pure platform. And really the mission for us as a business has been to recognize that actually the distribution model used by traditional online grocery is not fit for purpose. And many of you might ask, why is it losing £300 million a year? And I can tell you that it's actually much more than that now because the online grocery market has exploded to over £16.5 billion in the last 3 years. And the reason being is that actually, for some reason or another, the retail industry decided to adopt a vertically integrated linear distribution model. They all built their own individual networks, the Tesco network, the Sainsbury's network. Now, for anyone who understands commodity distribution, you understand that shared infrastructure, decentralized networks is a fundamental. That's why we have one gas network. That's why we have one electricity network. And so the reason you do that is because it would be prohibitively expensive to have heat and power in our homes and businesses if we didn't all share the cost of that infrastructure. And so what Buymie is that shared infrastructure for multiple retailers to manage the distribution, digital infrastructure required, and the logistics network to be able to provide same-day delivery. And so why is this happening? Why are we in this space? And to try and take it back a little bit, again, a slightly bigger view of what's happening at an economic level, which Dr. Reynolds really talked quite interestingly about there, is that we over the last 15 years have experienced a global shift in the way economic activity is managed. We have moved from an organizational economy of the 20th century, which was developed, in the Industrial Revolution with the first emergence of what we know now as corporates. And we have shifted to a market-based peer-to-peer economy for the 21st century. So an organizational economy relies on large corporations to manage and mediate economic activity, both labor and transaction flow. But with technology, with the level of connectivity, and with the rise of platform, we now have data-driven platforms sitting above almost every single vertical in every single industry globally. And what I mean by that is that you have a platform that sits above the market, not in the market. It soaks up local economic information at a rate that's never been done before through the use of these supercomputers that are sitting in our pockets. All of this transactional and economic data is generated, processed in a high frequency fashion, mostly by algorithms, which removes friction, allows stakeholders to connect and transact in a way that they've never done before. And you can see this happening across every single industry and market that you might operate on a day-to-day basis. And that's quite important to understand, because that is a fundamental change in the way our economic models work, the way our markets operate. And that's also quite important to bear in mind, because platform economics, something that's not quite often talked about, is fundamentally different to what we understand as traditional linear economics. And so one example of this is there's a terrific book called Modern Monopolies: How to Dominate the 21st Century, by the founder of one of the largest app development platforms in the US called Applico. And one of the most interesting insights from that is that if you look at the S&P 500 today, in 2020, you'll see that the total percentage of platform companies in the S&P 500 represent just 4%, but 13% of the total income generated by the S&P 500 is relevant to those 4%. And when you extrapolate that out, by 2040, we're looking at roughly 14% of the S&P 500 being platform technology companies, but 50% of total income generated coming from that 14%. This is a fascinating trend to really think about what that means for the way in which our markets are going to continue to operate. And this is happening right with, the funny thing about this is that it's not happening at a linear pace. This is happening at an exponential pace. You can see this happening in real time, and this is the perfect example of it. If you want to understand the difference between a platform business and a traditional corporate linear retail environment, you just look at Amazon and compare it to Walmart. The growth that Amazon has seen over the last 10 years is exponential, and that's not by accident. It's because of the benefits that platform economics has. They sit above their markets, not within it. If you think of grocery, for example, a perfect example of this is the grocery market. Total market size, and this is all channels combined. Bearing in mind that the top 3 fastest growing channels in this sector are in the order of fastest growing: online, discount, and convenience. All 3 of those channels will be exacerbated by COVID. No question. Online, if there's a recession, discount, and we can already see that local convenience stores have seen a significant uplift. So what was already a very fast growing 3 sectors of the market has just been accelerated even more so now. And if you look at the total market, and the way I would frame this is that if you look at the total market size, it's 250 billion-ish of total spend in grocery. The largest player, Ireland, UK, Europe, Tesco. Their market cap, £23 billion, I think, at last count. And now they're going head to head in their fastest growing channel online, with a $1 trillion company that's 4 times the size of their entire marketplace. It's not even a competitive conversation. And what we saw 3 years ago was a catalyst event. And if I was to ever say, if you wanted me to point to where the correction began for grocery online, I would point to the Amazon Whole Foods acquisition, because that was a catalyst event. You overnight had one of the largest platforms become one of the largest grocers in the US market. And this really fundamentally shifted the trajectory of the market, and it triggered a behavior pattern within the retail space, which is still continuing today. Just 6 months later, Alibaba invested $3 billion in Asia's largest supermarket chain. This is not a coincidence. Seeing these some of the largest businesses we've ever seen in a generation, in a lifetime, moving into this vertical is in such unison is not a surprise. But what we did see was retail starting to react, and we saw Target acquire a shared infrastructure platform very similar to Buymie called Shift for $550 million. And this was, again, retail trying to fight platform with platform, recognizing that the ability to scale, the growth potential that platform provides on top of the likes of a linear business and more traditional retail, provides that competitive edge required to really win in this space. And then, we were approached by the largest grocer in Europe, Lidl, owned by the Schwarz Group, in April of 2018. And by the end of 2018, we became the first independent e-commerce platform to take the largest retailer and the discount channel online same day for the very first time. And this is, again, quite a fundamental impact, because not only was discount the second fastest growing channel in the sector, now it's online, now it's same day. And these are all compounding and creating even more pressures on the retail market, as we know. And then looking at COVID, what we've seen is that 69% of people have actually gone to a shop and just turned around because the queue has been too long. I think every single one of us on this call has probably been in that experience. 57% have intentionally shopped at local stores, which speaks to, again, to Dr. Reynolds' points. 43% have bought a different brand. And again, we'll all have remember that the availability of product on shelf, particularly in the early weeks of the COVID outbreak, we saw significant challenges within the supply chain. 42% have shopped online because they don't want to queue. I think that's a trend that we'll continue to see. And 41% have intentionally bought Irish products, which I think, again, these types of environments start to drive kind of a national consideration of what we can do for our local businesses. Looking post-COVID, what's going to happen now that now that we understand that the new normal, the new world that we're living in? Well, that 59% will continue to shop online like they've done during the pandemic. And again, if you think about what's happened here, is that you already had a fast-growing channel. We've thrown an accelerant on it, which is COVID, and we've now accelerated, probably 3, 4, maybe 5 years worth of consumers into this channel to try it in a condensed period of time. That, again, is going to really fundamentally shape the trajectory of the market going forward. 48% will save because of uncertainty, and then again, I think this is a key area that I think everyone is mindful of. 47% will buy more bulk items. We have definitely we saw a large, sharp increase in basket size in the early weeks of COVID. We have seen it relax a little bit, but it's still a much larger basket overall as people shop more. And remembering that grocery has more or less been a beneficiary. As the hospitality and services sectors have suffered, grocery has really absorbed all of that spend, as people still need to feed themselves for breakfast, lunch, and dinner. And 34% will be one of the first back to their favorite restaurants. Again, a lot of people not feeling very comfortable with the idea of going to a pub or a restaurant just at this moment, and only 30% will really stop worrying about the virus going forward. And then finally, 87% agree that they will buy more from local shops, which again we've touched on earlier on. There will continue to be an investment in local products, which I think is, again, something that you'll see at a global level within all various markets. And 82% continue to pay more by card and cash. So again, this has probably accelerated the cashless environment, and glad that our infrastructure actually provides for that from the get-go. 79% will continue to be very cautious. I think masks are going to become a thing of common nature, and then local holidays will continue to be a big part of that. Happy to answer any questions that you might have, Laurent.
Yeah, thank you, Devon. Yeah, so I'm going to move on relatively quickly because I want to leave some time to Sinead there, and also for question and answer at the end. If you have any questions, I'm talking to the audience, please fire through the question and answer box, and I will ask them at the end. Very quickly, just for you, I mean, seems to me that you're in the perfect spot because, essentially, your convenience store, because you can deliver in less than 1 hour. So the proximity of your app, if you want, is just as good as the proximity of a local shop. You do that like at a cheaper price because you partner with the likes of Lidl, which is like the discounter, and you do this online. And those are precisely the 3 sectors that you have mentioned that will benefit or have benefited in the last few years of this change in consumer habit accelerated by COVID. So without telling us, because I know you're expanding to the UK, but without telling us too much about your company, how well have you been doing over the last couple of weeks? I mean, we need some positive news. Hopefully you can tell us, your pockets are full of cash.
I think it's as a period, I think it's unforgettable.
Right.
feel very fortunate that, you know, we're in the sector that we're in, and because as an early stage startup, you know, an event like this, so unexpected and given the delicate nature of startups, you know, this type of event really has probably wiped a huge amount of innovative businesses just completely off the map. And, you know, we feel very grateful that we're in the position that we're in, but also not without challenge. You know, the sharp spike, we saw a 300% increase in volume through Q1. We were trading 10 months ahead of our own business plan for 2020. And what that meant was that we had to really completely revisit what our expectations were for the year. We had to completely restructure our funding strategy and our commercial strategy for the year. And we were very, you know, I think in a very positive opportunity because we built up a very strong network and recognition within the market. All of the work that we did last year was all about scale. You know, how do we get our platform to scale with demand, because we were working with large enterprise retailers. And when COVID happened, all of that work really took on what I would call probably a higher meaning, because we overnight became an essential service. You know, we were very lucky that, you know, off the back of that and with the performance that we'd already had in the year, we grew our weekly volume 2,000% in 2019. And we were able to close 8 million in new capital in Q1 of this year. You know, across two rounds, one led by ACT Ventures, which is, you know, a very well-known venture capital firm in Ireland. And then our larger round was actually led by the Wheatsheaf Group, which is the sustainability, agri and food investment fund of the Duke of Westminster's family estate, the Grosvenor estate. And so with that, we found ourselves in a very good position to have, you know, the right backers, the right supporters, you know, that we'd be able to bring the business forward and really, you know, again, try to rise to the occasion.
Okay. Well, it sounds to me that you are describing something that, you know, was somehow of a success, but I can imagine that from the exponential, like more than exponential growth that you've experienced over the last months, you had encountered some type of logistical issue in terms of like managing this growth. And